Hi and welcome to GDV's Finance Talk. Today we're focusing on macroprudential supervision and my conversational partner of today's topic is Romain Paserot. Romain is the Deputy Secretary General of the IAIS, the International Association of Insurance Supervisors. But he's not only the Deputy Secretary General, but he's also responsible for the IAIS work on financial stability. Romain, thank you for joining us, looking forward to interesting insights into this very important topic.
And thank you very much from my side for your invitation to speak and this opportunity to share what we do at the IAIS on this very important topic.
Great. And to give you a flavor of what macroprudential supervision is all about, please take a look.
"14 years ago, the investment bank Lehman Brothers collapsed. The insolvency triggered a chain reaction, eventually threatening the entire global financial system. One important consequence, the establishment of a new, better connected financial supervisory system, the so-called makroprudential supervision. It is supposed to recognize risks at an early stage and identify potential threats to the stability of the financial system, apparently with success. It was able to withstand the COVID pandemic and so far the Russian war against Ukraine. Currently, the macroprudential supervision is being reviewed. To be discussed, the integration of new elements such as cyber and climate risks in the future."
Let's get straight into the detail. Romain, from your perspective, from the perspective of the IAIS, what is macroprudential supervision all about? What does it have to do with the insurance sector?
Well, there are, of course, many definitions of macroprudential supervision, the question of financial stability, but to put it very simply, I think we all recognize that the financial sector is providing very essential services to the real economy. You could think of lending, payments, and of course, insurance coverage. And this is the reason why any disruption in these services or in the general functioning of the financial sector can harm the real economy and basically our daily lives. So the purpose of macroprudential supervision is to make sure that the financial sector is resilient to shocks and can continue under any circumstances to provide these essential services to the real economy. So now, why is it important for the insurance industry? I mean, of course, the easy answer is that the insurers belong to the financial sector. The service that they provide is part of the broader financial sector. And so, of course, whatever is relevant to the financial sector is relevant to the insurance industry, and they should be included in macroprudential supervision. They are also of course, exposed to any shock that can occur in the financial sector. And so the resilience of the insurance industry is very important for financial stability. But I would like also to flag that the insurance sector also provides resilience to the financial sector in the sense that a lot of financial institutions are using insurance in the way they are mitigating risk. So I think you cannot have a full perspective of financial stability if you don't include this sector.
So, according to my understanding, the insurance industry, on the one hand, is exposed to risk. On the other hand, it provides some financial stability. When we talk about risks, are there specific risk categories that you're thinking of when it comes to macroprudential supervision?
We try not to limit ourselves because, I mean, we have seen recently how, for instance, an external shock to the financial sector, like the pandemic, has had some consequences, has triggered some challenges and specific risk to the financial sector. So, but generally speaking, of course, when we are looking at how the insurance sector can be impacted by what happened in the financial sector, of course, the fact that insurers are major investors in financial assets, they need to invest on a regular basis make them very much exposed to any movements or big movements in the financial sector. At the same time, they provide some sort of resilience because their perspective as investors is very much driven by the liability side, the kind of products they offer. So their perspective as investor is a long-term perspective, and that does bring stability within the financial sector because they tend not to overreact to market fluctuations.
So we have some impact on the asset side, we have some impact on the liability side, some financial stability providence on the liability side. So let's get to the instruments and measures. You know, I believe that, you know, when it comes to macroprudential supervision, we all know, you know, what supervisory measures there are. I would assume that when it comes to macroprudential supervision, it's not so obvious, you know, what are the instruments, what are the measures that we are talking about? From your perspective, what are the most relevant ones?
Well, I think it's true that the supervisory toolkit for macroprudential supervision is quite well known. But when it comes to macroprudential supervision, because the kind of risk that can impact the sector can be very diverse, of course you need maybe a broader toolkit. So what we are doing in the IAIS, where we are thinking of macroprudential measures, I think we are very much working in three directions. The first one is to build resilience within the system, to build resilience within the insurance sector. And of course, for that, macroprudential supervision is very helpful. Adequate prudential supervision, good level of capital available, diversification of risk, planning for worst situation is very, very helpful. And that's really building resilience within the system. And we have seen this resilience, for instance, where the global insurance sector was eaten by the pandemic. The second one is, of course, always looking forward and monitoring risk eyes wide open. You want to make sure that you are able to detect any early building up of potential systemic risk. And that's exactly what we are doing at the global level at the IAIS with what we call the global monitoring exercise, where we are collecting data from a pool of insurers and also from our members. And by using these indicators, we try to be able to assess on a very early basis any potential buildup of systemic risk. The last one is about the supervisory response in case of shocks. And that's, of course, very important that you prepare the tool that you may want to use because you know that shocks will happen. And that's what we are doing in terms of supervisory response. But also what is very important is that in many cases, what could trigger a macroprudential event is going to be global. So that's where the role of the IAIS is absolutely critical in making sure that there's a good coordination of the response from the different supervisory authority to some global risk or macroprudential challenges.
So it's a three-step approach, according to my understanding. First of all, you identify the risk. Secondly, you assess their impact. And thirdly, you take some sort of reaction to that at a global level.
Absolutely, that's absolutely true. But I would like to flag the first step, which is very important, that to make sure that you build resilience within the system. So, of course, I mean, it's very important that insurers, but also supervisors, they do think proactively of what could come. And they, again, by good governance, by good risk measurement, by good risk management, by putting in place some mitigation measures, by working on preparing a crisis, etc., a crisis situation, you really build the resilience in the system. So when the shock happens, you already have in place levels of to absorb these shocks.
So you just mentioned the role of the IAIS, and the IAIS is one of the major, it is the global major player when it comes to macroprudential supervision. What are the current work streams? I would assume that, you know, we are not done yet, so we don't have a final system of macroprudential supervision. What are the IAIS work streams to get it even better?
Yes, so first of all, of course, we are not working alone on macroprudential supervision and financial stability. We have the Financial Stability Board, which has this mandate from the G20 to work on financial stability, because, of course, you need to make sure that it covers all the aspects of the financial sector. And our contribution at the IAIS is really relevant to the insurance sector. So what are we doing? First of all, of course, a lot of work has been done in the aftermath of the big financial crisis. And so following the crisis of 2008, etc., we have reviewed completely the standards, the IAIS standard that our members are using for the supervision, and that includes the microprudential standards, but also the macroprudential standards. So there's been a very much a full review of that, and that has delivered a new insurance core principles and the common framework for the supervision of internationally active groups, which has been approved in 2019. And now our members are very much implementing these standards, and we are helping them and assessing what are the progress made in this implementation. The second pillar is, of course, what we have done for what we call the holistic framework. We have been looking at what is the best approach to deliver macroprudential supervision in the global insurance sector. And we used to have a form of framework that was very much based on the identification of a few globally systemic insurers. But we wanted to have a more holistic perspective because, as I mentioned earlier in the discussion, insurers can be impacted by common exposure, common shocks, and that could include also small players. So we wanted to have a holistic perspective. That's why we have developed this holistic framework for the assessment and mitigation of systemic risk. And that includes the different elements that we were speaking about, including the global monitoring exercise, which is an annual assessment, which is data-driven, which builds on the information we collect from a pool of insurers and our members. And it's a very powerful tool in the sense that it helps us to always be, I would say, fully aware of what's happening in the market. And if you think of the pandemic, for instance, it was happening just a year after we adopted the holistic framework. And we have been able to completely repurpose the global monitoring exercise to assess the impact of this pandemic. So a monitoring tool is absolutely crucial for macroprudential supervision. But we also have developed, and we are constantly reviewing, the supervisory toolkit, supervisory measures. We have been discussing them in the context of different crises, and we have a specific group that is continuing to monitor macroprudential supervisory responses to specific risk to ensure particularly that we have a good understanding of what supervisors are doing, but also there's a good coordination at the global level.
And here, I would assume that here, when we talk about framework, and that here's where also some new emerging risks such as climate-related risk would jump in, right?
Yes, very much so. Climate is, of course, a very important risk, and we have actually been working on this risk for quite a number of years. And our approach, I would say, to this risk looks very similar to what I've said. First of all, is to make sure that you have a good risk analysis. You have an evidence-based approach, and that's why we have now embedded climate risk within our global monitoring exercise. So we are collecting data, we are measuring exposure, we are doing scenario analysis, we are looking forward to that because we can build on this global monitoring exercise. Then the second aspect is supervisory response. So we are also in the process of reviewing all our supervisory standards to do a gap analysis, to look at, do we have what we need in the supervisory toolkit to address this specific risk? So that's true for the standards, but that's also true for the supervisory practices. It's not only the question of a standard, how supervisors are doing supervision. And for instance, we have picked up some particular themes where our members were asking, could you help us to do some sort of the extra mile from the standard? For instance, it's very important to do climate risk stress testing to the actual implementation of them. So we are building, developing, supporting supervisory practices for that. And the last aspect is disclosure. Disclosure is a very important aspect. There is a global project to develop disclosure on climate exposure, etc. Of course, we are contributing to that, but we are also looking whether it's appropriate and everything that is relevant to the insurance sector is fully captured with that.
Great, Romain. Thank you very much for giving us those interesting insights into, what macroprudential supervision is all about. The supervisory cycle of monitoring and assessing those risks. Thank you, Romain, for joining us. Ladies and gentlemen, I would assume that was really interesting also from your perspective and getting to know what macroprudential supervision is about. We will continue our GDV Finance Talk over the next month. I would welcome if you stay tuned.